This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds to give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. We're excited to announce that we'll be partnering up with MicroCap Club for our full slate of investor conferences in 2025. Ian Castle and his team at MicroCap Club have not only built and fostered the best community of microcap investors, but it's arguably one of the best investing communities, period. We couldn't be more thrilled to leverage our expertise in curating and hosting large-scale microcap conferences and teaming up with MicroCap Club to put together world-class conferences for the microcap community. First up, the Planet MicroCap Showcase Vegas in partnership with MicroCap Club will be held on April 22 through 24, 2025 at the Paris Hotel and Casino in Las Vegas. Registration is now live. Please visit planetmicrocapshowcase.com and I'll see you in Vegas. My guest on the show today is Adam Wilk, founder and portfolio manager at Greystone Capital Management. I invited Adam back on to discuss an article that he wrote back in August 2024 to explore the idea of investors/shareholders finding companies. In other words, delving deeper into a statement made famous by Buffett, and I quote here, "Companies ultimately end up with the shareholders they deserve," end quote. There's many different ways to think about this concept, and Adam and I do our best to cover them all. What I thought was actually particularly interesting was why Adam even wrote the article in the first place. He was inspired by potential LPs and other investors asking him, why won't this company stay cheap forever? And I would have thought for sure this article was inspired by management teams asking him about this topic. So, just on that, I was already surprised. And, we go into so many more things here. So, and for full disclosure, we discussed a number of companies during today's podcast. I am not a shareholder in any of them. And thank you again for tuning in to the Planet MicroCap podcast. And please enjoy my conversation with Adam Wilk. Adam, thank you for joining me today. How you doing, man?
You're welcome. Thanks for having me. Doing great. Thanks.
Absolutely, dude. Well, Happy New Year, man. We're recording this on Monday, Jan 20. We're still good, with the Happy New Year's, I think, And it's been a while since you've been on the pod, man. So, first things first, how you doing? Everything all right? How did 2024 go for you? I know you're probably in the middle of writing your investor letter, so I'd love to, let's get that quick update, and then we'll brief people on why I invited you on today.
Sure. Yeah. Thanks for having me back. It has been a while. The year went well, and I thought both performance was decent, and the thing that I focus on the most, which is the operating performance of our companies, was also really good. I think a handful of businesses exceeded my expectations, which is always a good thing in any given year. And so I'm pleased. But yeah, as you mentioned, I am kind of finishing my year-end letter right now and working through the end of my annual review for 2024 as well. And so this month, I was telling you before the show, this month is a bit of a wash in terms of things like new idea generation and other stuff, given the letter, some administrative work, and trying to kind of tie in the lessons learned from 2024. So it's been a busy time, but hopefully my letter will be published next week, and look forward to having some discussion surrounding that as well.
Absolutely. Yeah, no, look, this is that time of year for fund managers where, I think every update I've seen on LinkedIn and Twitter and whatnot, it's in the middle of writing my letter. But this little part I wanted to share right now because it was good, and I just always like, nice, I'm just thankful that everyone is still writing their own letters and not just turning to Chat GPT yet, right? Like this could be the last year of just actual, original thought.
It's possible. I did experiment with some stuff recently with Chat GPT, not so much for my letter, but getting some summaries on things and asking if the model could put together a presentation on something that I wanted to write about on my blog. And the results were actually pretty disappointing. I may still do something with it, but in terms of the letter, I think so for the foreseeable future, most of the commentary will come from me.
Oh, well, that's good to know. Listen, I'd rather know that I'm talking to you and not robot Adam. That really
Yeah, fair
makes
enough.
that
I
actually.
think my partners would share that sentiment.
Yeah, for sure. Very cool. Well, look, the main reason I invited you on here today is it's actually for an article that you wrote last year on August 6th, 2024. You can find it on MicroCap Club. And the title of the article is "We Will Find You." And the subtext here is companies and shareholders will end up deserving each other, and our job is to find the ones that deserve to be found. Now, I love this topic. I think it's super interesting. I mean, it kind of we kind of also what we do here on Planet Microcap, both on the podcast, CEO interview, the event side. We help serve a lot of this. The discovery phase and or like maybe that first interview that company has done, or somehow that interview ranks higher, and whatever. We definitely have a hand in some of that process. But at the same time, there's also multiple ways. I mean, there's infinite ways in which folks are discovering new ideas, and not just discovering new ideas, but discovering the ideas that best fit what their style is as well. So let's start real quick overview. What was your thought process? Why did what made you want to write an article like this?
The genesis of the article was me thinking about the question that I get often in meetings with potential partners or even talking to other investors, which is why won't this company stay cheap forever? Meaning, when you find an interesting idea that, from a valuation perspective, looks good, there's a lot of times a question of it's underfollowed, maybe illiquid, maybe doesn't trade on a large exchange, and people may have a concern of who's the incremental buyer, who's going to recognize this business. Again, why will this company not stay cheap forever? I hear that question all the time, and as I think I wrote in the article, I've come to like it less and less because the formula is very simple. If you are a business that is growing your earnings power over time, your stock should eventually trade or re-rate in line with that growth in earnings power. Stocks follow growth in earnings per share. Or even revenue growth. That's a fair categorization. And so after a couple long walks with my dog, I just wanted to kind of express my thought. I started thinking about this a lot, and I wanted to kind of express my thoughts surrounding this topic. And for some reason, I talked ad nauseum basically about my experience in the NBA and working in basketball. And I always come back to that because investing is a great place from which to pull analogies from other disciplines. And basketball, there are a lot of parallels there, as we've talked about before. And I just kept coming back to this idea of a really great player who maybe isn't playing professionally or in college in the U.S. but has all the talent to be an NBA contributor. And I started thinking about the idea of that player going their entire life or career without getting noticed by the NBA or not getting a shot, simply because initially they played in a country that wasn't well known for producing stars, or just, again, not as visible as the US. And I just started thinking about kind of the absurdity of that statement and wanting to take that to the extreme. I obviously thought of Giannis Antetokounmpo, who's the All-Star championship winning forward for the Bucks. And I had, as I wrote in the article, I had the privilege of watching a very early scouting tape of his back when he was in high school. And it was this kind of grainy film of him playing in Greece in this, dilapidated high school gym. And he was a fraction of the player he is today, a fraction of the size as well. And I just started thinking about how silly it would have been if he had morphed into the player that he is today, but was still stuck over there because he was less visible to the U.S. and in the U.S. And you can kind of liken that to companies. Again, if there's a great company out there that is growing their business, where their margins are going up, where earnings power is increasing, where they're not diluting shareholders, where capital allocation is strong, and you don't go into it at an extremely high valuation, you're likely to do very well over time owning that business, just in a vacuum. That's kind of the concept. And if there is a business like that has not yet been recognized by the market, that's an interesting sort of subset of companies for me to kind of sift through. And so it all started with this idea of working around this question of, why won't these companies stay cheap forever sort of thing, which is obviously a big contributor to the sort of dislike of small companies in the current market environment. So that's kind of where it started.
Absolutely. So, there's so many different rabbit holes to go down on this. And I think there's going to be a number of constituents maybe listening to this and be like, all right, want to understand this further. Because I mean, the first one that comes up, like there might be an IR representative listening, investor relations representative listening to this and be like, yeah, for sure. It's every company's dream to grow organically and an investor to find you. Great. Like that is the best possible scenario in a lot of respects for especially small micro nano cap management teams where they're just focused on the business. They're running a public company. Maybe they be back. What's the word? Back asswards or back whatever. The phrase. Into being a public company, and now they're like, all right, great, I'm running a public company and whatnot. So I mean, what would you say to some of those folks that are like, all right, yeah, great, they're growing organically and investors will find you. Let's start there. I mean, that is obviously the goal of all these companies. But for those that maybe are like, well, yeah, we might be growing organic, but we have hair. Like, what do you say to somebody that's like, yeah, cool, Adam, all right, I hear you, but it's a lot of them that aren't, or maybe they have hair, but love to hear your thoughts.
Sure. Yeah, it's funny because this question doesn't necessarily make for good podcast fodder because the answer is short, which is if you just operate your business well, and again, your earnings power goes up over time, your stock will do very well. And I'm very partial to management teams who don't pay much attention to that dynamic, what the market, how the market perceives our stock, what's happening with the share price. I wouldn't say it's a red flag when a management team starts talking about that, at least in conversations with me, but it is maybe a yellow flag, and it's just something that I want to pay further attention to down the road. I think there's great examples of companies that do not speak to public companies that do not speak to investors at all, and the share prices have done great. TerraVest is a great example of that. As far as I know, they only hold select kind of small group meetings, and in full disclosure, we do not own shares of TerraVest. But as far as I know, they only hold very small, like select investor meetings, like private calls, which then maybe they make available for recording. But that stock has been a multi bagger, and they don't spend any time communicating with shareholders. They just run the business well, and for a period of time, the stock had not appreciated like it did last year, or I think the year before. But they've just done an excellent job of running the business. And again, earnings power has gone up considerably, and they have not diluted shareholders, which is a great combination. And then there's companies that spend a lot of time on it. I've invested successfully in businesses that have kind of revamped their IR presence, and they've wanted that to play a part in communicating their story to the market. And there's companies that have already had a good IR presence who just do a very good job knowing what kind of shareholders they're looking for. And so there's no real formula for like, here's how you do it. I would say, and the article really has two parts, where one is talking about the things we just mentioned, the working around the dynamic of why some companies won't stay cheap forever, even if they are initially. The other part of it is kind of the question you asked, which is how management teams and companies can know that investors will find them if they're doing well. Again, this goes back to my days in basketball, where the most obscure players in the world will be scouted, will be found, will be talked about if they're good enough. It's that simple. If you're good enough to play in the NBA, you have a skill set, you have NBA size, your age is at the appropriate range, you're not going to be ignored. There's a global market for scouting talent, and the same thing exists in capital markets. I always like to say that microcaps come with an embedded discount because of their size, which I think is true. There are fewer eyeballs on them. I don't think many people would argue with that, but don't get me wrong. I'm not the only idiot looking at these companies. If a company does well, or again, if there's a great business that's growing and has a great management team in place and a long runway, and it's trading at 3 times cash flows, I'm not going to be the only one buying it or looking at it. There could be other things going on, but you get the point. And so what I've been asked this question by management teams, where they say, we've done XYZ, or we're trying to do XYZ. How can we get the market to notice what we're doing? Or, what's your take on how we get the stock price up? And again, setting aside my kind of dislike for that question, the answer is to just continue to execute. There's, again, really no other way to put it. And I've seen time and time again, no matter the size of the company, if that takes place, then the stock will work out well. And again, you could point to a company like TerraVest, which when I first came across it, I think was $100 million market cap, or $150 million Canadian, something like that. That one has worked out well. I've seen $50 billion businesses who grow their earnings power that have worked out well. And I've seen the most obscure mining related tiny $5 million market cap companies, explode on the back of a good resource report or something along those lines. And so given the global market for scouring talent and good companies, there's always going to be a market for what a good company who's growing their earnings power is doing. And it's really just about a company executing. And sometimes people want a more complicated answer than that. And I'm afraid, at least from my perspective, that probably that should be sufficient when asked by both management teams and also just looking at these businesses yourself.
100%. And I agree with you. I agree with you wholeheartedly. At the end of the day, it really comes down to, no matter what the type of investor you're looking to get, as long as let's say if your plan is to, get more liquidity in the stock or get more liquidity in your company, that you're going to be probably doing a little bit more IR, and you're going to get that kind of investor looking at your company. And if that's what you wanted, okay, that you got the investor that you deserve. I mean, it's exactly what Warren Buffett is really more or less saying here. But, if you're looking for some, more strong hands, folks that, you're hoping will invest in the company or own shares for more than, a year, 3, 4, 5 years, or want to just own it indefinitely because they believe in the long-term prospects of the business, as long as you execute on the plan to get that type of investor, you'll likely get it, assuming, a lot of things go right. I mean, that's really what it comes down to when I read this article, is that it's not like, you're not here waving the flag like, I'm the best, my style of investing is the best, I'm going to get that. It's not really that. It's more like, no, look, like, depending on whatever that plan you have is as a management team when you're running your public company, as long as everything goes right and you have that plan in place, like, you're going to get what you're likely looking for. It really comes down to when you just have a different expectation of like, okay, I'm going to do all these type of things. Like, maybe let's say do that, doing the plan where you're going to get a lot of extra liquidity, putting out a lot of all that kind of stuff. But like, no, but I want that really long-term shareholder to own my stock, even though I'm putting out like nonsense PRs or, spending a goofy amount of money on IR. Like, it's just misaligning what your likely outcome.
Sure. Yeah, agreed. In all cases, I think, and look, I'm not against IR infrastructure and telling the story. Yeah. I think it's very beneficial in today's day and age, especially because, look, I mean, we live in the world of computers right now where algorithms, quantitative-based strategies, momentum things are kind of running the market. And a lot of times I've seen some cases where analysts and the market need to be kind of spoon-fed results the investment thesis. And sometimes that comes from an active investor. So I've been invested in stocks where either an activist or just a vocal shareholder will put a letter together or a report or a presentation, and they will, again, spoon feed the market. Here's the valuation case for this company, and here's the way I see it unfolding, and here are the 3 to 5 year targets. And then you see, significant stock appreciation, and then people start to ask questions around that presentation and that sort of thing. And I'm not saying that the companies have to do that, but having an IR presence in place to facilitate meetings between company and investors and to get the story out there and to streamline the communication and to make it more professional, that's always a good thing. There are good IRs and bad IRs for sure. But in the smaller company range, it shortcuts the research path, I think, or the search costs for investors, because if you go to a $50 million market cap company's IR page and all the documents and filings are laid out, and the press releases are very easy to get to, and you can get transcripts of the calls and the webcasts and the presentations. That's very helpful to investors, and optics are important. It makes the company look professional, and then when you reach out to IR, if there's a timely response, if they connect you with management, if they understand, if they ask you the right questions about, at least for me, what I do and what kind of businesses I invest in and kind of what I'm looking for, those are all positives, a positive part of having the IR infrastructure. And we may be talking about a different thing now, but it's not a bad thing. I certainly don't advocate against it. And I think it's more about, again, just answering this question of why won't these companies stay cheap forever? It's really about being patient and taking a long-term view. If your time horizon is a quarter or 6 months or a year, you will struggle to match up earnings power, growth, and operational results with a positive stock price performance a lot of times, especially if a company's small, especially if it's a business in transition. So patience is required. And I'm writing about an example of this in my letter about a company called Despegar. Full disclosure, never owned it. Was a big mistake in 2024 and years past to not own it. But they're a Brazilian or South American focused online travel agency. And the company IPO'd in 2017, I believe. It was a very popular venture investment sort of tech darling, sort of thing. OTAs are excellent businesses. This is no different. And the stock dropped about 50% after the IPO. So it was very much a broken IPO we were in a bit of, there were other issues going on at the time, but probably growth disappointments at the outset and maybe a high valuation privately. And so a couple things contributed to that, but the stock dropped about 50% from its IPO price and then traded below that, and it was flat basically for 4 years. And during that time period, the business was executing incredibly well. Revenue was growing. They were entering into new markets. They were further developing their product market fit. They had all these opportunities to improve the P&L. They were introducing new products. The concept of an OTA, I think, really took off probably post 2010. I'd have to check my notes on that, but and so they're doing everything right, and the stock didn't move. Little fluctuations here and there, and then this past year, I would say the past 18 months, the market finally started to recognize positive operating results. I mean, their revenues and cash flows exploded post-COVID, and the stock ended up being a multi-bagger from those levels starting in, again, 2019, 2020. But you had to have patience to sit through that. And what I wrote about was the reason I brought that up is not only that I whiffed on that as an error of omission, but Despegar would have been considered a terrible investment if your time horizon was short. If you thought, well, these companies are small and this one's cheap, but it's going to stay cheap forever, nobody cares. It would have been considered a really bad investment. And it ended up being a multi-bagger, obviously depending on when you bought shares. But if you purchase it at any time up until about 2022 or so, you would have done really, really well. I wrote about it because the company just entered into a deal to be acquired by Prosus for just shy of $2 billion, something like $19.50 a share, I believe. And the stock was trading, when I first started looking at it seriously, was trading around $5 or $6. So really whiffed on that one. But the point is that you look at a company like that and you can say there's a great reason why it wouldn't stay cheap forever. You saw the positive operating results happening for a period of years, and it just takes time. Not every investment works out like that, but I think that's a really good example of just, there could have been naysayers all throughout that period. And if you make your North Star the operating results of the business, which is what I try to do, then that's really all you had to pay attention to. And that's a good example of just maybe that idea of like really good companies, again, that are growing their earnings power will not stay cheap forever. It might not happen overnight, but they won't stay cheap forever.
100%. That's a great example right there. I mean, I think the other thing I wanted to get to, is look, you in the article, you have these 4 main points, that, as stock pickers, I'm quoting you here. We as stock pickers are looking, or here, let me start a little earlier. companies that grow earnings power, I mean, you pretty much said this, but I quote, companies that grow earnings power and don't dilute give themselves a great chance of getting noticed, no matter how small. That's because we as stock pickers are looking and we will find them. And then the four main bullet points. If you grow organically, investors will find you. If you don't dilute, investors will find you. If you allocate capital responsibly for the benefit of shareholders, shareholders will find you. If earnings power grows, investors will find you. I think, end quote. And so, I mean, I think some folks might hear that and read and be like, all right, again, it comes back to that, I mean, that's where, the art of finding, good quality company comes into play, right? Because you could go through 100 names and, maybe there's a few of them that, hit all those different metrics and it's still, cheap. But then you're going to have some others that, you might actually look and be like, this might be a decent business, but, maybe they just a bad financing or, or they're not, that might've been a bad acquisition right there. And, their earnings, they're not growing as fast as maybe I thought I would, what would you say to some of those management teams that are like, I hit some of these things, but, it's on a spectrum of, what you would decide you would think is, good versus just and how do I attract those investors then or get in front or get discovered by the higher quality investors, even if it's using your example, like this there was a lot of stuff there that it wasn't exactly hitting all those rah. And at the same time, there's probably good companies that might be hitting this but then ultimately end up being a loser. So love to hear your thoughts on that.
Yeah,
I hit on like a bunch of things. I apologize.
No, that's great.
Yeah.
There's so our friend Ian Castle of MicroCap Club, he has this saying that probably found its way into the article, which is if you grow revenues and earnings and don't dilute, your stock will go up. And he actually gives a mathematical example where he says I'm probably butchering this, but something along the lines of if your revenues go from 10 million to 30 million and your earnings go from 3 million to 6 million, that's a X bagger, 5 bagger, a 10 bagger, whatever. Again, I'm butchering it, whatever his math is. And I think that's a very cogent way or concise way to put it. When we find these investments and we're trying to project the future, we are making assumptions about growth rates and the cost structure and where margins end up and what the cash flows are going to be. And I think it's hard for me to speak to all the companies and how they can kind of find the right shareholders, but what I'm looking for is like obvious quality. And I don't mind a business that's going through a transition or where there's a little bit of hair on it or where the future is going to look different from the past. Those have been some of my most successful investments where there's a perception of XYZ, but that's really not true if you dig in. And so I'm looking for a very obvious, and the obvious part comes in when a business kind of blows expectations out of the water and people kind of say, oh, this is actually not this XYZ label that we put on it before. In the case of Despegar, a broken IPO label can last a long time. A lot of investors got burned. You buy a stock at its IPO that's supposed to grow X amount or be, some kind of tech darling, et cetera. And the first couple quarters out of the gate, they're struggling to find their footing as a public company. And the stock drops 50% in a short period of time. You're burned by that. There might be people who never want to look at that type of business, that business in particular again. And then maybe there's stuff with tech and OTAs that get lumped into that. I don't know what it is. Like I said, I never owned the stock, but I like finding situations where I can kind of clearly identify, I guess, how the perception is going to change. And going back to this idea of, talking to somebody and having them say, why won't this company or these companies stay cheap forever? That's our job to find out why. I kind of pose a challenge in the article or on Twitter or something where I said, if somebody can find me a business that is consistently growing their revenues and earnings, that's not cyclical, and they're not diluting shareholders, and there's a long runway to continue to do that, and the market still hasn't recognized the earnings, the positive operating results, tell me what it is. I'll buy the stock sight unseen. I won't actually do that, but you get my point. I'm posing a challenge because it doesn't exist. Eventually the market will recognize it, and you can go from there. But on the management team side, I think the quality and the what's happening from an operating standpoint should be very obvious. In other words, it's kind of like a self-fulfilling thing. If you are doing all the right things and you're shareholder friendly, things will work out eventually. And then the company will get bigger and you'll get a little bit more coverage and investors will start talking about you and other people will pay attention. And maybe if you're not on an exchange, you'll uplist or you'll get some institutional flows or whatever, however that path unfolds. It's different every time. And certainly there's a lot of nuance here with what I'm saying. But for companies themselves, it's just, again, coming back to this idea of not worrying about it so much and just focusing on the business. And if you can do that in a way that benefits shareholders, again, don't dilute, be very friendly, shareholder friendly, open communication. It also is business specific, but if you can do it in a way that's very shareholder friendly, then it works out well over time for the stock price. I don't know if that answered your question, but
no, it very much does. It very much does. And honestly, like that's where great IR comes in, right? Because a great IR firm or individual should be able to look at management and be like, just go run the business. Just focus on running the business. We'll go to our 1 to 2 conferences a year, as I'm pointing at myself, and we'll handle the rest in terms of gatekeeping as well as communication. Here's what we got to put out there, and let's go from there. Like that's it. Just run the business, grow, do that. Everything else will take care of itself. We're just here to make sure that things are being properly communicated so that investors are at least, up to date. They understand where they can get the information so that when you do have that kick-ass quarter or that, big inflection point that happens, like you're ready to go. I mean, that's also a really important part of this whole, I guess you'd say strategy, so to speak, and being a public company and the genesis of being a public company.
Yeah. And there's, I agree. And in one instance, without naming the company, I have been working on a business that I own now that, where the IR is excellent. And I don't know many investors who are doing work on this company or meeting with management in person. There are some, but I don't know many. It's not super widely followed. And the IR has been excellent in terms of in my initial contact point with them, getting me in touch with management. We were just in the same geography and they made it a point to let me come by and sit with them for an hour. And so that's not something that's just available to me, but those little things of professionalism, and we want they read some of my stuff to get a sense of how I invest and what I'm looking for. And they want that type of long-term, actively managed, fundamental-based investor. And so they make it a point to kind of push me through to the management team. So things like that, in going through a process like that, you can kind of pick up little hints about what kind of company this is. They're not reaching out to me. It's the opposite. And so they want the kind of investor that's going to think through 3 to 5 years results of the business, who's not going to ask management about, the next quarter so much, where earnings are going to come in, whether they're going to be 10 cents above or below consensus. And just somebody who is more concerned with, like, again, the long-term operating results. And that's a good sign to me. It's not the only sign. There's, this business is certainly not without its issues, but just in terms of talking about IR, they've been excellent in that regard. And I think it's been a big value add because historically the business has not gone down that path. They haven't spend time telling their story. And I know to some that may seem like a red flag. It's like, oh, you want to talk to a bunch of investors and this and that, but I disagree. I think in this case it's a real positive, and it's because the IR is excellent. So it definitely cuts both ways. Again, there's a lot of nuance here, but yeah, from the company side, it's a lot of times they should just have their head down doing their thing and not so much worrying about the stock price. And the best companies I find don't do that. You'll rarely hear it mentioned. Amazon's a great example. Looking at a large company, they started out as a smaller one, but if you read through Bezos' shareholder letters, I think absent the financial crisis, the .com bubble, I'm not sure he talks about the share price at all. There's one letter, I think maybe 2001 or 2002, where he just talks about how the business is faring based on what's happening in the outside world, I think, if I can remember correctly. And but the whole focus is on the business itself. What are they doing to grow the company? How he's thinking about the long-term vision, what pieces they're putting in place for the next 5-10 years. He's a obviously extreme example, maybe the best CEO to ever live, but you want to find companies that think about their business in that way. And the IR stuff, while important and everything, will sort of take care of itself. You will, if you're doing what he did, which worked phenomenally well. Eventually, you will attract the right investor base and the right shareholder base, and that it goes for a $50 billion company all the way down to a $50 million company.
Absolutely. Real quick, are you an Amazon shareholder still, or were you? I don't. Sorry.
No, don't own it. Which could also be considered a massive mistake of omission. But no, do not currently own shares of Amazon.
For sure. Well, I mean, I think we pretty much covered the main thesis and point of the article that I wanted to kind of dive deeper in. I mean, is there anything else that you wanted folks to take away after reading this, or anything we missed?
Yeah, I don't think so. I think we covered everything.
Yeah.
Yeah, I just really spend a lot of time thinking about that question. I get a lot, especially in meetings with prospective partners or clients. It's have you thought about moving up market cap, or won't these companies just stay cheap forever? And I just wanted to put down, I think, a concrete answer to that, or a short snippet of my thoughts on that down on paper and get it out there. So it's not.
What's interesting about the your genesis for the article and why you read it is that it was inspired by potential LPs about it being staying cheap. Because I would have assumed that it would have been management teams asking you about, like, hey, how'd you find us, or like, hey, do you think that? I mean, I'm sure part of it was, but it seemed mostly because of just your current or prospective LPs, which is I actually find quite fascinating. I would have thought for sure it was the opposite.
Yeah, that's interesting. It wasn't, but I think now I'm maybe like Ian, actually, probably on a mission to change the narrative about small companies. And
let's go. We're all there.
Again, great investments can be found at $50 million or $50 billion. Meta or Facebook what has been a multi-bagger since the IPO. I think they IPO'd at 50 billion or something, and have done 25% per year since then, since 2012. So incredible results. The company was huge when they IPO'd. So, and then, again, similarly, a lot of small companies become larger ones. And so I'm on a mission to change the narrative against small companies.
Yeah, man, let's keep doing it. So I think we're pretty much there. I mean, this was the main reason I wanted to have you on here today. I mean, is there any I guess looking here, I'll ask you one more, just for fun here. I mean, looking ahead here, 2025, I mean, anything that's catching your eye, or things that are of interest, or themes that you're kind of looking to dive deeper into, and it could be anything, but I'll throw it to you.
Yeah, it's a great question. I don't think there's any broad themes that I'm sort of paying attention to, or themes into which I'm investing. It's obviously more company specific. And I mentioned earlier, I've been just trying to finish up my annual review from 2024 about that kind of just goes through transactions for the year, and what happened broadly and with the businesses specifically, and how I'm thinking about our positioning and what might happen this year. And nothing came from that in terms of a theme or something. Nothing came from that process either so far. And so it's a good question. I mean, there's a lot of, I will say, maybe more on the negative side, there's still a lot of uncertainty. The inauguration was today. There's a lot of talk about tariffs will affect a number of businesses and countries. There's large companies are still very much in favor, which some people think that's a boat that's kind of about to tip over. Not so much of that camp, but there's that dynamic to watch out for, and their market leadership. But I just think high level, there's a tremendous value in other areas of the market where less people are paying attention to, and where you can find really good businesses trading at really cheap valuations, and the management teams are doing the right things. So I've been just focused on those kinds of things, idea by idea. And but if that changes in terms of a broad theme, I'll probably put something down on paper and talk about it that way.
I'll know when you're just like, hey, Bob, you know what? I can't make it to Vegas anymore. I'm just, which obviously hopefully that won't be the case. We're celebrating your birthday there. Let's go.
All right, I'll be there.
Good stuff, dude. All right. Well, this has been great. Always fun chat with you. Where can our audience go and find more information to follow you on socials, as well as a fun website?
Likewise. Yeah. Thanks again for the invite. Really appreciate it. I'm on Twitter, aka Wilk, WILK, Greystone greystonevalue.com. Greystone is spelled Grey. Any of those places, I'm available. And yeah, I'm floating around the small cap and micro cap event space as well during the year.
Go. I'll see you soon, man. Well, Adam, thank you again for joining me here today. Really do appreciate it. Good luck. Stay safe. And I'll see you in Vegas.
Yeah, thank you. Have a
See ya.
good one.